Before we start, I want to take a minute to talk about our friends at Bitwise. Bitwise has a lot to offer to people like us who live and breathe crypto every single day. They're a crypto asset manager with $10 billion in client assets and a team of more than 100 people across the US and Europe. They've got the world's largest crypto index fund, a wide range of crypto ETFs, on-chain solutions, you name it. They also manage private alpha strategies, have SMAs for large investors, and are one of the largest institutional Ethereum staking providers. And by the way, they've been doing it all since 2017. These guys are pretty much OGs. So check out Bitwise, go to bitwiseinvestments.com and see all they've got to offer. That's bitwiseinvestments.com, or just email james@bitwiseinvestments.com and let them know that REKT brought you over. There are a million ways to access crypto. Do it with those who are all in on crypto, who care about the ecosystem, who live and breathe crypto every day. Look for Bitwise at bitwiseinvestments.com. And of course, always carefully consider the extreme risks associated with crypto.
Hey, Real Vision viewers, a quick pause to introduce you to today's sponsor, Axelar. Axelar is building the rails for the next wave of global finance, not just crypto, but the future of how assets move, how markets connect, and how institutions plug into open systems. Think of it this way. Bitcoin brought digital gold, Ethereum brought smart contracts, but Axelar is bringing connectivity, the secure link between your favorite blockchain and traditional financial institutions, rushing to plug in. It's why top-tier firms like Dragonfly, Polychain, Coinbase Ventures, and Binance Labs are backing Axelar, and why global giants like Deutsche Bank, MasterCard, Apollo Global, and JP Morgan are already building on it. If you believe the future of finance is open, programmable, and interoperable, Axelar is the gateway. Want to digest deeper? Visit realvision.com/Axelar or follow on X at Axelar. That's AXELAR, the gateway to open finance.
Well, hello everyone. Welcome back to a new episode of REKT Vision. We don't have Mando this week, but we do have a very suitable replacement. Welcome back, Sergio, the CEO of the Meebit Company, a recent title for you. So congratulations on that. How are you doing? Welcome back to the show.
Hey man, thanks. It's always exciting to be here when things are pumping. A lot better than when things are wrecked. Even though wrecked is doing so well, so I'm just happy to be here with you today.
Awesome, awesome. Well, good to have you back on the show. Before we get started, we're going to be joined later on by the Arch Public guys, our affiliate partner. They've just launched algorithmic trading for SWE on their platform. You can check it out on realvision.com/arch. There's also a free tier you guys will have access to. So we'll get more to that at the end of the show. But we will kick things off here on what may be one of the greatest day this year, I think, for crypto. Some may say the lovely summer of risk well and truly in play right now. What's your take, Sergio?
I think the thesis is playing out beautifully, right? I think after what happened last week, Congress and the big beautiful bill, it is clear that any administration is just going to spend money here in the States. It just depends where they're focusing that spend, and it's clear that they're just going to keep printing, and there's no limit to what the U.S. is going to do as far as like debt concerns or anything like that. So obviously, Bitcoin, crypto, fixed assets are just going to continue to outperform, I think, as well with stocks, right? But that's kind of like a given.
Yeah, I think so. It's interesting because it feels like we've had this like mammoth stock rally now for a while. Since the April tariff lows, but stocks have sort of just kept going. And in the last few days, stocks have somewhat stabilized, but it really, really is now crypto that's just on a mission. Like Bitcoin yesterday with all the short liquidations and everything, and ETH followed suit afterwards. It does feel like we're finally starting to see that crypto outperformance again. It's kind of led by Bitcoin, but I would say Bitcoin dominance is off the highs. ETH BTC is starting to move higher. There are many altcoins in the last 24 hours that are up quite a bit. So it does feel like we're starting to see some of that performance. Do you have a view on I know the CT is very split on this view, with many people saying it's just going to be Bitcoin-led rally. Many people are in the alt season camp, which I definitely am in. Do you have any view there?
Yeah, so I think it's Ether season, right? It's clear. So I haven't spent as much time in the trenches as I used to spend. I just kind of like taking a step back. Obviously now with everything we're doing with Meebits, but definitely still have my finger on the pulse. And it was quite clear, 18, maybe 24 months ago, that Solana had all the mind share as far as what was going to be the next big thing after Bitcoin. I think Bitcoin has been it since the ETFs. I mean, that's just a function of flows and the ability for anybody with a brokerage account, with a retirement account, to get exposure. I think the few times that I've been here, we've discussed that at length, mostly with Mando. But I think Bitcoin dominance, it was a one-way street. But now you get that narrative change. Now you get people really starting to wake up to the things that are happening in the Ethereum ecosystem, which is first and foremost, right? The new leadership of the Ethereum Foundation is incredible. And you're seeing it not just directly from the EF, but ecosystem leaders like Joe Lubin going on CNBC, really starting to pound the table and pick up like new figureheads that are also going to start really doing kind of like the sailor role, but for either like Tom Lee. And then this whole narrative around stable coins, right? Like if we're going to have $1 trillion worth of stable coins, they're not going to be secured by a chain that only has $300 billion in market cap. So I think that's just a narrative that becomes very self-fulfilling, just like the bearish ETH narrative became very self-fulfilling prior to, let's say, like a couple of months ago. It was just one of those things that fed on itself and it made sense. But now you've seen the changes. People that were at the core wanted to see like the Ethereum mindset change. That's definitely changed. And then you're starting to see the narrative outside of that also just be like people are bullish ETH. I think just from the catch-up trade where ETH, just retraces back to the highs. That's what a solid almost 2x from here. or a little bit less than that now that it's rallied so much this week. So I think that, as we've seen, it's such a momentum-driven market that it just continues to feed on itself. And also, I think CT, everybody says they hate ETH, but we all have a lot more exposure to ETH than anybody would care to even just admit, because the majority of, like, at least this last 5 years of CT is people that came in to Ethereum. And it's all like dear to our hearts. So I don't know, it feels like there's a definite vibe change where it's just like Ethereum's turn.
Yeah, I agree with that. I think we've had a few different calls on this show, and we're not always right on all of them. But Mando and I did kind of flip bullish on ETH a few weeks ago, which, I mean, I want to say it was good timing. It's not like this is probably 2 or 3 months ago. It's not like ETH has gone crazy then. The sentiment around it has improved significantly, but the price action, I think, has been okay. It's been decent, but it hasn't been crazy. But that's one that we have been quite bullish on. The other thing that we mentioned, I think, not on last week's shows, but the week before, was that Sharplink looked very interesting, because he had that big run up to about 100 or something like that. And now it's been on the move again. And I don't know quite where it is now. I think we were looking at Sharplink versus, so it's up 20% today. It's probably up about 2x off the lows, maybe even more than that, 2.5x off the lows. But that is one that seems to be on the move. It seems to me that the playbook for some of these sort of like crypto treasury stocks is you have this initial pump when everyone FOMOs in, then it just pukes and sells off. And then you start to see, the real capital flow in and things start to move again. Do you have any view on like how this stuff would trade versus ETH? Like, we were chatting about this a couple of weeks ago again. It's like, is this maybe like a more convex way to play the Ethereum trade because of how strategy trades versus Bitcoin, and it's much more levered and moves up a lot, moves down a lot. But with something like Sharplink, which is, I guess it's off the lows now, but a couple of weeks ago it was pretty much like back to the lows. It was like that seemed to us a more interesting way to play ETH, but at these levels it's less clear.
Yeah, I think for a trade, to your point, right, convexity. Like for me, convexity is hard to like pitch a position that has higher convexity, because obviously it works both ways, right? To your point about it drops so much after the initial pump. Obviously, if you're not sitting there in front of the screen every single day, don't really know how to like risk manage this kind of stuff, you can get in over your skis. And it could be, you can have the right view but the wrong trade on. I think for this, it's specifically the Ethereum treasury companies, until we see an actual MicroStrategy type execution where they go out, they offer more shares, they lever themselves up to buy the underlying. It's going to be like anybody's guess as to what happens. I will want to see one or two of the companies like really execute the way MicroStrategy does to really have more conviction on buying the equity. Personally, I'll just rather hold ETH myself. Again, just let it run, do its thing. I can use ETH on chain for other stuff. Don't really, I personally don't have the ability to buy US equities, given my wife works at a bank and it's a whole mess, as you remember. But I've been looking at them. Just because obviously it's part of the new Ethereum narrative. And to me, it's just like, I don't know, it's rather buy a call option on ETH if possible, rather than try to play these weird structures that, unless you really understand capital structures, you really trust management to go out and do the right thing, I think can leave you with the right view but the wrong trade. And obviously, I skew a little bit more conservative on the risk curve myself.
Yeah, that makes sense. I think that's fair. I think that makes sense. It's also sort of like it's a bit of an unknown quantity, at least with strategy. You sort of now have multiple years of performance and a good idea of what they're going to do. With Sharplink, it's less the case. But then, you sort of had Joe Lubin talking about it, who I think is definitely a respectable person. Like, I don't think he's going to do wrong by it. He has no reason to or need to. His main goal really is to, push Ethereum, I think. So I do think it has enough backing by legit and real people where, it's less of a that stuff is less of a concern to me. And it's definitely a tempting trade. You know what I wish? I wish you could trade this stuff on chain or just like with crypto. I know you've had some of these stocks that you can trade on Robinhood now and that kind of stuff and on Jupiter. But I would love to be able to trade like SharpLink and some of this stuff. Just because the main hurdle for me is like moving money out of crypto and into, or just even moving fiat to a brokerage account. There's just so many hurdles you have to jump through. It's so frustrating where it's like, withdrawing money on chain, you can just move it around wherever you want and just ape basically. So I kind of wish there was, I know there's a SharpLink meme coin, but it's not quite the same thing.
Why not just do like ETH perps then? If this is like an ETH beta play,
yeah,
little bit of leverage, which is what you're getting at the end of the day. It's just a different kind of like turn. I'm it's funny, right? I don't want to sound like the contrarian, but quite bearish like stocks on chain. And I've put out some tweets about it over the last few. Yeah. I fundamentally, having worked on an equity, sales and trading desk for over a decade, there's a lot of mechanics there that I don't think yet makes sense. Especially when it comes to like governance, dividends, voting, like unless you're actually issuing the stock from the beginning on chain, or you do like a shelf for on-chain stock.
Yeah.
Kind of like taking something that's, a legal concept in the traditional world and try to putting it on chain with like all kinds of, risks that you introduce. I don't think it's the most efficient way. I would want to start with ETFs actually, because ETFs you don't really have to worry about, because when you buy and I know that everything's a meme nowadays, even with stocks, but you technically own a share of a company. Like that's what you're buying at the end of the day. I doubt most people say, oh, wait, I'm 0.0001% shareholder of Apple, but you are if you buy the equity and it's sitting with a custodian. If I buy a tokenized version of that's a derivative that sits in my ledger, for example, there's a huge ocean between that. But anyways, that's for another day. I agree with you though. It would be fun if people could participate in some of these narratives on chain. But I do think there's if the trade here is Ether, then just Ether perps with like small amount of leverage. I don't use leverage, but people that do, I think could be similar. And then to your point, you can move in and out quickly, and not have to worry about dealing with the trading hours on traditional markets and so on.
I had one more question on that topic actually for you. What about, I know maybe like having actual stocks on chain is difficult because of all the benefits, I guess, if you like you get with owning equity. But what about just derivatives? Like there's stock futures markets, there's CFDs, all that kind of stuff. Just what about like stock futures on chain where you don't have to care about any of the kind of like governance stuff, if that makes sense, but it is just like a speculation on the price, and maybe there's a deliverable, or maybe it's a perpetual future, so there's no deliverable at the end of it. Like, what do you think about that?
My first question is always like, why, right? Like, why? Who does not have access? And I know people are outside the US, but the majority of the people trading these markets are in developed markets, right? And like, what is the point of trying to get access to like a stock like Apple that moves 2% a day, if that? Yeah. Obviously, there's days that they move a lot more, but a $2 trillion, $3 trillion company is not moving that much on a daily basis. And so you're paying some sort of funding for the exposure. I mean, there's so many things on chain that move a lot more. If the view is like, I want to trade and perps on like a bunch of things, because those underliers move a lot more. Like how much does their average S&P move in the day? Like less than 1% probably. And so then becomes a reason of, I think the rages that are like, oh yeah, stocks on chain. Oh, we're bringing like Wall Street and TradFi onto the blockchain. We've won the narrative. Like these guys are coming. When in reality, like the most successful product that's been integrated in that sense is the Bitcoin ETF, where we took the crypto coin and we put it in a traditional market. So it was the other way around. Same thing happened like with NFTs, right? Like we didn't really bring traditional collectors to this world. in the sense of like growing that. All we're doing is kind of just slowly penetrating like the Sotheby's and the Christie's and the museums. So I think that there's, outside of like the narrative and the VC money that's being pumped into it, there's actual little why when you have really good stuff like Robinhood and all these other brokerages that allow you to access those markets already. And yeah, if you're abroad, I mean, what is, let's just be honest with each other, right? Like, what is actually the buying power of somebody sitting in Brazil? Oh, by the way, Brazil has an incredible electronic equities market, and they're actually one of the pioneers when it comes to fintech. They have a lot of access to these types of things. And so the retail, like the retail crowd outside of the US that has the means to trade US equities, they usually get exposure through some of the stuff that you mentioned. So I don't really see something that is like, oh my God, like this is so much better, and it warrants the level of like, yeah, we're gonna trade Apple on chain. Like, okay, like it's the same. It's like, oh, I don't have to KYC to get trading on chain. At some point along the line, unless somebody gifted you crypto, you KYC'd for like a crypto exchange. Even if that was like PayPal or Venmo, like that is KYC. So I don't know. Again, I think it's just one of those narratives that's completely overblown. But if it brings eyes to Ethereum and the whole world's gonna get tokenized and it's gonna be on Ethereum, hell yeah, like let's go. But technically, I am a little bit more bearish than the actual narrative when it comes to that particular product.
Yeah, fair enough. That's interesting. I do think my only counter to it is I do think there's a lot of wealth in crypto, like on chain, basically, that may never leave being on chain just because so many issues with getting stuff into your bank account and that kind of stuff. And I think people still, I think personally, I feel like for me, at some point when I sell a lot of things, if I ever sell a lot of things, I'll have a lot of stables on chain. I may not even put that into real money. I may just keep it as stables for, buying the dip again. But I wouldn't mind being able to put that into more defensive things, or maybe even like start with more defensive, assets, which are like stocks.
Which stables do you use? USDC and Tether, probably,
Tether,
right?
Yeah.
Yeah. At some point, you have a feeling in the back of your mind that if you wanted to redeem that for dollars, you could, and it wouldn't take you too much, right? So you sleep fine knowing that you have X amount of USDC or Tether, and 3 clicks of a button, you got dollars in your bank account if you want it.
Yeah.
Whereas with on-chain equities in the current context, and I know we're super early and things are going to change, but the way they are today, you have a $10 million worth of Apple, but it's some sort of like wrapper on somebody else's interpretation of an on-chain equity. Those stocks, those actual equities have to sit at a custodian anyways. So they're going to be like Boney or like one of those like big guys that would have been regardless if you bought them on Robinhood. So you're just adding like layers of risk, but you're paying the same price, which I don't know about you, but I don't think that really works out over the long term where you're paying higher. I mean, you're paying the same for something that's got 3 or 4 terms of risk on top of the other. Unless you can buy the stocks at a discount on chain to compensate for that risk, that's a different story. But if I'm paying the exact same price that I would on Robinhood for something that is synthetic exposure that has 2 or 3 custodians along the way, and I have to take care of it myself, I think it just doesn't make a lot of financial sense.
Yeah, I think that's fair. I think that makes sense. Yeah, interesting. I was not expecting to hear you so negative on that. So it's interesting to.
Yeah, I don't want to be gloomy. I think being realistic, a lot of the narrative sometimes is people that have never really sat on a desk and had to like borrow. And it's like, like if we were talking like credit, you could definitely bring a more nuanced perspective than would your average, even like VCs. If you've done really well, like great, you funded some great companies, but when it comes to stuff like this, like unless you have actual experience, then it's a little bit more difficult to understand like the actual that last mile. I think is what's challenging. Also like a great opportunity. But yeah, I think my mindset will change once we get companies actually directly issuing equity as tokens, or like tokenized equity directly from the get-go, because then you'll have whatever frameworks you need to actually have a claim to that equity. rather than some sort of, I mean, you traded credit derivatives. Like we know exactly what happens when a CDS triggers and your counterparty that, you know, short to you says, no, that was not on the clauses, or like, I disagree with that language. And so now you got to go to court, you got to fight it out. You got to get the ISDA board to like, it's just a mess. So yeah, at scale, I think that's my big concern with the current version of tokenized equities. But let's tokenize the world and put it in Ethereum. Yes.
Yeah, exactly. Let's coin it. Let's coin everything. So what's your take on where we go from here? The Bitcoin chart versus the M2 chart still shows there's a lot of room for Bitcoin up to 200K. Now, obviously, we can't always track it one for one, and there's some lag, and it's not going to be identical to it. But that chart clearly shows there's a lot more room. Next week I believe we have CPI next week, and I guess payrolls is not until the first of next month. But there seems to be some increasing speculation on, like, Powell having to do a rate cut, or having to step down, or getting fired, and someone else who's going to cut rates coming. So the rate cut narrative is really almost being like forced down our throats. So it does seem like there are a few catalysts there, and that's not to mention you have stuff like stablecoin regulation coming through in the US, and maybe any findings or anything that comes out of like the crypto task force in the US, which has been going on for over 6 months now. I think we're supposed to hear back from them this or next week, I believe. So there are catalysts there. So is your feeling and belief that this move can keep going from here, or are we at a level where it's like, okay, this was where I thought we would be, now we're here? So
I think, Raul and Julian have been so consistent with their calls and their views that this has a lot more to go. And just looking at taking a step back and looking at everything that's happened in the last 3 or 4 months, that should technically be negative risk, right? You have a administration that's just shooting from the hip, to call it, just put a casual term on it, when it comes to global policy, economic policy, tax policy, like fiscal policy. Like, it's just all over the place. And it matters like a week or two, but at long term, it just really doesn't. And this kind of like beast of a market that's just feeding on itself, but like in a positive way, where people just get more bulled up. I used to, since I was on like the equity derivatives desk, I used to know the ETF market inside out, and I knew the volumes and like the most traded ETFs and all this stuff. Like it was my job, right? So I hadn't looked at the ETF market up until like 2 nights ago. That I was having a conversation with an old macro friend, and I looked at the most traded volumes. And it was insane. It was ETFs that didn't exist when I was on the desk 4 years ago, or 5 years ago now. But that also, like, the concept of them did not exist. It's like the 3x, Tesla, the 2x MicroStrategy. That's like this really degen tools that exist today, just like, 0-day options, and just continue feeding the flow monster. And the flows, I think, are just continue to be part of the narrative, and just this flywheel that, when you put that into a macro context like the one Julian and Raul have been describing, continue to call for, I think that's a perfect mix to just sit on your hands and just watch it do its thing. Will there be scary weeks and drawdown weeks and people get over their skis and we have liquidation cascades? Yeah, sure, we have that all the way from the last 2 years, right? But I don't know. I remember we were in Miami at the Real Vision gathering, and one of the panels, I was like, I'm just sitting on my hands and just waiting for this, like, for really things to play out. So I think here being like 5-6K above all-time highs, of a level that we've kind of like bumped against 3 or 4 times already. It's probably, in the face of everything, is probably not the place where we're just gonna like stop. And one last thing I'll say is I was having a 4th of July barbecue with a friend and her husband, and I'm in crypto. They hadn't really brought it up, and the first thing he asked was like, "Man, did I mess up not buying Bitcoin before? I bought like 10K. I keep watching it. I want to buy more." Like, it's starting. Those conversations are starting back up. I think people are quick to have PTSD and be like, oh, normies are talking like Bitcoin and Ripple, like, oh shit, it's time to sell. No, I think there's different types of signals. For me, it's my dad when like he doesn't speak English and is not in the financial market. So every single time he's asked me about Bitcoin, it has been the top in 17 and in 21. So I'm just waiting for him to ask me. But before that is people who are adjacent to financial markets that are not into crypto that are like, wow, what a run. Am I late? Or like, can you please tell me more about it? And so we're going through that like normie, I don't want to say early adopter, but normie like curiosity level that usually predates that really big run into the top end of the cycle.
Yeah, that's fair. I think I agree with you. I think just even though we've had this great big run, to me it feels like it's less of a, oh wow, this happened, to more of like a finally we're moving now. That's the sentiment. And I think there are catalysts still out there. And I think there are people who still want to get involved, both from a traditional and a retail standpoint. And I think at the beginning of the year, Trump almost looked a bit silly because we had this crash and everyone was like, oh, this is just a scam again. But we've now obviously reversed that and beyond. And I think not even just on like an investment or trading level, but on, like for us and all the work that we're doing, you probably had the same thing. Like when we mentioned crypto 6 months ago, like, for the REKT drink stuff, people wouldn't even pick up the phone to you, or they would immediately assume you were some sort of scam. Whereas now you mention, you're a crypto native project, everyone feels like they're not doing their jobs properly unless they're listening to you, because they're seeing, left, right, and center what's happening and what's changing there. So I think these are just like very structurally bullish things for the industry as a whole, things that we've been like praying for in previous years and previous cycles that we now have. And I think people lost sight of that a little bit earlier in the year with the other crash, when it's like, look, everything is now, there's no Gensler, there's no SEC security stuff, there's no Biden, all that stuff's gone. Like this is like now a clean path for crypto structurally. And not only is it a clean path, but the US is out there with their strategic Bitcoin reserve talking about potentially acquiring Bitcoin, other states and sovereign nations acquiring Bitcoin. This is just like a next level thing. So I think these are things that are not to be faded, and that I think could actually potentially put Bitcoin a lot higher than where it is now. So I'm still very bullish here. Like I don't feel like this is a point to sell or reduce risk. I think it's worth looking at alts. Like I still looking at a few alts out there, maybe even a few meme coins and that kind of stuff. And it's like stuff is down still 50, 60, 70, 80% from the highs. And I'm not saying all of it is going to rally back, but what I am saying is like, do you want, with Bitcoin approaching 120K, do you want to take a chance on something that's down 80%? Or, maybe some of the better stuff that's down, I'm not talking about like scam stuff, obviously. It may not work out, but you may have this crazy move in some of the stuff. And I think that's generally what my view is. I was curious, in terms of your portfolio construction now, like what do you own? How's it split percentage wise? Are you mainly just Bitcoin and ETH? Or are you starting to look at other stuff? Would you ever consider getting back into like the meme coin stuff? Or what's your expression of trade for high beta if you're trying to outperform Bitcoin? Like, how are you thinking about all that stuff in terms of portfolio construction?
Well, I just discovered another wallet yesterday I forgot about that has 10 more Meebits. So I have 58 Meebits. That I imagine your personal exposure to REKT is also probably your highest exposure to anything. So for me, it's and obviously Meebits. I love Meebits and I love NFTs. So NFTs for me have been a good way to express ether longs. So punks, some cool art. I don't do like meme coins myself. It's never been something that I'm good at. I play to my strengths, I think, where I can, or little ones that I have, and things that I can I can have an effect on. So for now, it's a core Bitcoin position that's been sitting there for a while. Actually, it's like a whole different wallet, never gets touched. It's just like sitting there, no temptation to do anything with it. And then at the beginning of the year, I was just looking, actually, I continued to accumulate ether at levels around here. It was a painful April, very, very painful April. But yeah, just stuck it out. I think the long-term view is that Ether continues, like I said, continues this rally and actually gets to even just a catch-up trade with Bitcoin will be great. But I think the narrative is so much stronger today than it was 6 months ago, let alone a year ago. And then the rest of the stuff, honestly, like I said, for me, NFTs kind of like play that like left part of the curve, like tail risk part. I think, there's only so many in that collection. And so those are like quite limited once they become in demand. They're hard assets, and there's an ability to like layer things on top, just kind of like what you did with REKT. Don't really have anything other than the required. I call it the Rob Powell friendship portfolio. So Solana sold a lot of that into SWI. And then just random things that I've picked up along the way through like airdrops, or just mostly like airdrops, like from farming DeFi on Solana and so on. Haven't sold them. We're doing a lot better in December than they're doing today, but I do think that liquidity wave that you described earlier is coming at some point. And I'll be looking to take profits at certain levels, or at the end of the year, in like a lot of those things that I've kind of just I had like Mad Labs. I got a bunch of like tokens for those, that kind of thing. So but it's mostly Bitcoin, Ether, and then a lot of NFTs.
Yeah, that makes sense. What do you think on, or two questions actually. First is SWI, it's something we've spoken about a lot. Not really something that I think Mando and I have ever really owned meaningful amounts of. I think at times we've favored it, but generally have preferred other stuff really. Do you have any thoughts on that? And it does really, the question always seems to be like SWI versus Sol. And I almost kind of do prefer SWI versus Sol here, just because of all this, Sol unlocks and stuff that are coming. And, everyone knows about that big Galaxy Digital sale a few months ago. And I think some of that stuff is unlocking soon as well. So Solana does feel like it has a lot of sell pressure. And actually, if you look at it, if you look at the price of it, you're like, well, it's still way down from all-time high. But if you look at the circulating market cap of it, it's very close to all-time highs, and it's breached it a few times. So you really have to factor in the unlocks there, which I think people don't often do, and they're so focused on price. But do you have a view on SWI versus Sol? I know you just said that you sold a lot of Sol for SWI. Is that something that you would maybe consider growing as part of your portfolio, bigger position? Or is it just the, hey, Raul, I actually own some SWI?
I know that Raul's going to be a billionaire. I don't want to be left behind. No, for me, it's more for SWI specifically. I think the ecosystem's, I don't want to say maturing, it's just growing. They did a good job bringing over Source, for example, to get kind of like the NFTs going on SWI. Definitely seeing them pop up a little bit more when it comes to conversations about what the next generation of blockchains is. We'll think of, okay, well, retail or normies or like adjacent people are coming in. The whole low unit bias, I think, is very, very apparent. And so, if people compare it to, it happens to Ripple, right? Like people compare a $160 Solana token to a $4 SWI token. Which one are they going to buy? It's just a behavioral thing, a psychological thing. They'll tend to go for the SWI. And so I'm keeping it. Don't have a ton of liquidity these days, to be honest, to be like buying stuff. Obviously, rotating things involves calculating taxes and so on. And now that things are materially higher than they were a few months ago, obviously that's part of the calculus that you have to do. But I think I prefer it in the sense of if people are going to come in, it's going to ask like, what's the next something? And it has the right characteristics to be part of that story, kind of like be that next generation, blockchain. And while most people don't care about performance and what's being built, hey, they look at something that's worth $3 and they compare it to something that's worth $116,000 or $3,000 or $150,000, and $150, and they're like, yeah, I'd rather get a lot more of the $3 one.
Yeah, that makes sense. Yeah, I agree that makes sense. I still feel like I'd rather own ETH over SWI. I think
same.
It's a tough way. It's a tough one.
here
It's a tough one because, like, you know, if the whole alt season theory works out, SWE will massively outperform ETH.
Sure.
But I feel like I can own ETH in more size and be comfy with it, I guess is what I'm trying to say.
I've slept comfy with ETH for 4.5 years.
Yeah. So right? Not that comfy then.
no, because it's a long-term view.
Yeah. No, I hear you. Yeah.
Right? Like if you bought Amazon at the top in like 99, or I don't even know if it's public yet or not, but like any of those companies, like the Googles of the world, you just had to wait a little bit and they worked out. And so the thesis has always been long-term. And narratives are great short-term, but I think the long-term thesis for me, it's always been ETH. Granted, yeah, if you look at financial performance versus almost anything else in this space, that's not done well. But that the other side of that token is that, okay, now that we got the narrative back, and now they're actually seeing meaningful progress. And now, to your point, right, when I was at Fireblocks, I was there for 3 years, and a lot of the conversations were, you know, stables and tokenization. They were pushing in that direction back in 21 and 22, but no meaningful institutions in the US, which is still, you know, the capital of the world when it comes to finance, would dare take the risk, the legal risk, the compliance risk, or just the headline risk to go beyond like a small test case or something like that. But now that that's been removed, then they are taking that. And so when I chat with my old colleagues from Fireblocks, they're busy and they're excited, and they're not dealing with, you know, the little people. They're dealing with like the largest traditional institutions in the world. And so for me, that's a sign that thesis that we had 3 or 4 years ago is actually playing out. And you know, it's amazing. I mean, we had back then got to meet the Robinhood team, and they were already working on the stuff that you saw today. This was 4 years ago. So things like that for me, I'm a little bit more longer term. And I think that favors ETH because it's a known at the end of the day. Like, you know what can do and what he can't do. And yeah, and it's just, I don't know, it feels like home.
Yeah, that makes sense. Okay, and then the other question I had actually was, what do you think of NFTs here? I don't know, obviously, you know, you're going to be more constructive on it, but I guess some NFTs have been moving and have been doing very well. Xcopy stuff has been doing very well. High quality stuff has been doing very well. Even some PFP collections have been doing very well as well. But, you know, we're nowhere near the dizzy heights of 2021. One of the theories for NFTs, the main theories really is like, once people have made their money in a crazy bull market, they will buy their flex items, which is like, hey, okay, I just crushed it. Here's my Xcopy 101 that I'm now gonna buy. Or here's my crazy rare punk that I'm now gonna buy. And maybe we're not quite there yet in terms of money having been made. Do you think we see a run towards the end of this move when people have made money and captured games? Or do you think we will never see the levels of 2021 and we'll never see that much focus, but we can start to perform, you know, on high quality stuff in a decent way?
I think the levels of 2021 were, obviously, they had a lot more things behind them. First of all, you know, there was just less supply in NFTs. There was a lot more liquidity from stimulus and all that stuff. I mean, you're seeing it with real estate, you're seeing it with watches, sneakers, like overall, those kinds of like extremely discretionary assets have really come off. Now, when it comes specifically to NFTs today and going forward, I do think that we're gonna continue to see new buyers come in. They're trickling in right now. There's not a lot of new people. There hasn't been new people in 3 years.
Yep.
But to the point about like, oh, crypto is okay now, or crypto's cool again. Well, you know, nobody really like bonds to like, oh, I am a Ether guy, or I mean, except for like the Bitcoin maxis. But like these new people, like, right, if you're gonna come into SWE, for example, let's use that. What are you gonna like buy a bunch of SWE and put it on your Twitter profile, like the logo? Like, how are you really gonna become kind of like a tribe member or a team member of that ecosystem? But if you buy, you know, one of those little Klainosword thingies that they drop there, like, okay, that represents to the world and to yourself that you're part of Team SWE. Same thing for Ether. I think that if you know, depending on the level of wealth that you want to flex, right, you either buy a punk for $125,000. I mean, I do think punks go to $1 million. I think punks are like Bitcoin. whole different story from like the rest of the market. But if you want to flex, for example, like a REKT guy, like, hey, I love what they're doing. They have a brand coin. I love the art. I vibe with this style of let's just go. Like we've gotten REKT in the past. And so that's where NFTs are not just like a flex of wealth, but also an ability to identify yourself with a larger online community, which is what this whole world population, humanity is going. And that's really what the value lies. And now if you look at NFTs that have intrinsic value, where they come from a particular artist or group of artists or duo of artists like Larva Labs, for example, where like, okay, they recognize in the art world, there's the actual demand for them, and you see like a trajectory that could be really positive in the long term, then yeah, you not only get that exposure today to the community, and the community is not just being on Discord and like messing around. It's a bit to like wear like a Spurs jersey, for example, right? Like I wear my San Antonio Spurs shirts all the time, and now they have Ledger as sponsor. I'm gonna wear them even more, and walk around and have other people like high five me when they like see me in New York with a Spurs jersey. That's what NFTs are to me, and I think over the long term, that's where the value comes from. But yeah, I agree with you. Like, are we going to get just any random collection, mint out $10 million, pump 100x? No. I mean, I hope so, because I have a lot of NFTs, but I wouldn't bet on that specific part of 21. I would just bet on teams that have been building or art pieces that have kind of become ingrained with the canon to really continue to accrue that type of value over the long term. And people wanting to say, hey, I'm not flexing that I'm rich. I'm flexing that I'm part of this group. I'm flexing that I'm cheering for the Yankees and they just swept, the Braves or whatever that might be.
Yeah. Yeah, that makes sense. I see that. That makes sense. I'm still kind of like modestly bullish, like low-key bullish on it. So we'll see what happens. Well,
there's not a lot of them.
There's not a lot of good stuff, I think.
Yeah, and I like the good stuff. Right? There's 8,000 penguins. There's
probably
10,000 punks.
Probably like 3,000 punks. I mean, how many punks are actually out there for sale? Not that many, right? So
1,000 punks are for sale. Like it's not a lot.
There's small numbers, which I think those things can escalate very quickly, and I think they will do again at some point. The question is whether it happens this time or not. But one to look out for. I still find it very hard to allocate a meaningful amount of capital to it.
Obviously, it should not be the majority of your portfolio. Like it should not. Because of like the risk or whatever, right? Like the liquidity is fragmented and it's bad. The bid offer spread. There's not like you try to sell, even if you wanted to dump 10 punks today, like you would take a meaningful hit versus just selling $1 million of Bitcoin, which would be the equivalent. If you wanted to get out. I think that's where like the risk management framework that you have really comes into play.
Yeah. Okay, fair enough. Okay, cool. So let's move on to, towards the end of the show, let's bring on the Arch Public guys. We have CEO and co-founder, CEO Tim, let me start again. CEO Tillman and co-founder Andrew Parish, also known as AP Abacus on Twitter. Welcome back to the show, guys. I know you have an announcement to make about Sui, actually, which we were just talking about, but I want to comment on the good performance again of your algo in what was until yesterday a very long period of a 100 to 110k chop, which it captured very well. Curious to hear, how things are looking with this big move higher, and how I guess it'd be maybe useful for our viewers to know like how would like the typical recipe operate in this kind of a move when you have this massive wick on a candle higher on Bitcoin and it holds, and then please let us know about the sweet stuff you have going on as well.
Yeah, the point of the algorithm is to be disciplined and to not get ahead of yourself. So it's not looking at this move any different than any other move that is a qualified event. So if it moves up by the percentage that you have it programmed in to move up within the time frame that you have it programmed, it's going to execute that trade, and it's going to execute it with the capital allocation that you've told it to execute it with. So one of the great parts is you don't have to try to time the tops. If you look at any blow off top to any market, you should have been 60% exited before the top. You should have been exiting systematically on the big green candles all the way up. And that is a difficult thing to do when greed is in play and human emotion is in play. And, conversely, it's very difficult to sell when you're deep in a loss because you keep convincing yourself that the position is going to come back. So this is a very strategic money management tool as much as it is a trading tool that allows you to dollar cost average, but in a very intelligent manner. It's timing the dips and being available to take advantage of those dips. So, one of the things that we talk to our clients about is all of these, thought leaders in our space, like Michael Saylor, who say things like, the volatility of Bitcoin is a feature, it's not a liability. Well, that doesn't mean anything to the normal person because they're not taking advantage of the volatility. They're not scalping that volatility. They're not able to leverage against share price into larger purchases with that volatility. There's not an upside for them if you're sitting 100% in Bitcoin with no cash on the side to buy the dips. The dips are a negative to you, right? And so psychologically, we need to change that. And software like we've built helps somebody train themselves in a way where they look at dips as a positive thing, because dips are, if you're looking at accumulating a position over time, that's where you should be accumulating. That is where you should be executing those trades. So it's been an exceptional run. We would anticipate if the price continues to pump, price discovery often does lead to large increases in price. We would see multiple executed exits on those tops, and you would be cashing out of half of your position. If you have a 2-to-1 bull bias, for example, you'd be cashing out of half of those profits based upon where they entered and what that criteria is. So exciting times. It's always nice to have accumulated a lot of a position at a low price and then get to exit that position for profit. That's what you kind of.
And Tillman is very humble about what we're doing and the way that we're doing it. But just to give you an idea, in the April lows associated with tariffs, just our stock, both 24-hour and 6-hour ARB strategy on Bitcoin, bought Bitcoin at 76, 77, and 78, right? So you grab significant stacks of a position at those lows, bought again at 83 and 88 and 91. And then just 2 weeks ago, when the United States bombed Iran, and in the middle of the night, essentially, you had a flush down under 100, bought again at 99, right? So algorithms are set up to remove emotion and just simply execute based on the rules that they've been given. So they don't know Iran exists. They just don't. They just see the price action and they act on that price action. I think last night there were several exits on the 6-hour associated with above 116, right? So again, there's no emotion. There's just math, and whatever version of that math, of that equation, that you're either using one of our stock setups, or you've made the own adjustments yourself, as everybody can do with our tools. You're going to get those executions based on math. And we've got a couple charts that can be pulled up now that take a look at over a 90-day period. And if I'm not mistaken, that looks like our Bitcoin chart. And you can see the little blue arrows are all of the entries. And we try to point this out on every show that we come on with you guys. Those entries always come on big red to the downside candles, and the exits always happen on green to the upside candles. And Tillman, if you can explain what that means for folks.
Yeah, well, in a perfect world, you want to be buying when everyone's selling, and you want to be selling when everyone's buying. And that's harder to do in practice because we're reactionary as people. We wait until the price moves and then we react to it. Well, algos have a lot of advantage in the fact that they can do math very, very quickly, and they can do it on a multitude of fronts. So as you start to see markets get exhausted on whatever time frame you're measuring them on, you're able to exit on that exhaustion before the volume dries up. And so it's just an advantage that is inherent in trading automation versus trading manually that comes with every trade. And it seems like magic, but if you really think about it, when a candle starts to pump, if you're looking at a 1-day candle like we're looking at right now, look at those large green candles. You can see the wick above the body. You can see exactly a correlated volume attached to it. So if you're sitting there looking at, okay, I'm in profit on positions that I took, if you look at all the blue candles, for example, at the beginning of April, those are great times to harvest a little bit of cash yield based upon the volatility of Bitcoin. And the volatility of any of the assets like SUI, which we're excited to announce today based upon popular demand, might I add. We've talked to several hundred of the listeners of this show that have requested we want to use the algos to harvest the volatility of SUI. Well, now you can. It's supported on Kraken. We've launched that integration as of last week. So reach out to one of our team members. We'll help you get set up on the free version, and you can try it to your heart's content and see what we're talking about. But seeing is believing. And the best way to look at it is the market does not wait for you. It doesn't care who you are. It doesn't care what time you wake up. It doesn't care anything about you. The market just responds to the buy and sell the market order book that is currently being traded against. And if something happens in the middle of the night, or when you're picking up your kids from school, or when you're at your normal day job, that presents an opportunity for you to buy a dip, and you're not sitting at your computer, you cannot take advantage of that. Automation can, and it can do it according to what your preferences and what your desires are. So it's completely user driven. So to Andrew's point, even if you use this tool just to exit at better fill rates because you're exiting on green candles, which have a lot of buying volume attached to them, you would have a benefit to using it.
Makes sense. It feels like what you want to do and what I do is you want to have your big long spot position on whatever it is, Bitcoin, Ether, and then you want to have this, and in addition to that, to kind of get you through that chop period and stuff. And basically, I guess I'd view it as like a yield on what you have. That's kind of how I view it.
Yeah, well, it is. It's especially we've started to launch partnerships, like for example with Directed IRA. They're plugged into Gemini and Kraken. You can trade your IRA account tax free. What's better than trading automation or day trading automation, might I add, and having a tax advantage to doing that? So the future of crypto and the 24 nature aspect of the markets. And the fact that now automation is being integrated natively into these platforms, it just gives the consumer such an advantage. And like you said, it allows you to produce yield. We did a case study against the last 12 months. If you had put $100,000 of Bitcoin to work and you had just let it sit with its stock settings, and the stock settings against 100,000 essentially look very similar to this. Every time the market drops by 2.1%, you're going to buy about $500 of Bitcoin. Every time the market goes up by 2.6%, you're going to sell about $250 of Bitcoin. So there's a 2-to-1 bull bias in the cash being deployed on the buys versus the sells. And what that does is, though, it allows over time, if the market's choppy, for you to get a lot of those sell tickets through the order books. And those sell tickets have half of your profit attached to that entry point, being sold off into cash. And that produces cash if the market trends sideways and is volatile. And so what I try to explain to people is you're not really betting on the software working as much as you're betting on Bitcoin or SUI or XRP or whatever you're trading remaining volatile. If it remains volatile and it's moving the price back and forth, up and down, you're going to be executing trades against that volatility.
Yeah.
Yeah, the people that again, we talked to hundreds of folks that wanted us to give them a sweet product, and we did. And just look at the chart, man. I mean, it's just gobbling up on the way down. Big red candles on the way down. And then it's not going to exit, almost on a head fake. It waits till it absolutely pops. And then again, it grabs near the top, right? So if you're somebody that's using this software and you love SWE, if you were doing it on your own, at some point in that cascade down, you're thinking, should I continue buying this, or am I getting my face ripped off? What am I doing here, right? And then on the way to the upside, again, it's human nature. I'm not selling anything, man. This thing's going to $5 in the next 24 hours. And again, that's not true, right? So neither of those things are true. And because, and Ovi, both you guys know this because you worked on trade desks. Across Wall Street, automation and the ability to use tools like that is ubiquitous. It's everywhere, right? It's literally everywhere. But in crypto, it's not. And this gives people the opportunity to not be basically tricked by their emotions at any given point, to the upside or to the downside. It allows them to harvest volatility. We often get asked because we have versions of our algorithms that are considered yield versions of our algorithms. And people will ask, well, where does the yield come from? And that's a question that harkens back to the scams of the past. The yield comes from volatility, pure and simple. It's just volatility that gives you the opportunity to not only accumulate a position, but also to generate yield from that same position.
Yeah, that makes sense. I see that. And then, so SWE is through Kraken, is that correct?
That's correct. Is. Yep.
Yeah. And then do you guys have plans to get some more exchanges on and that kind of stuff as well?
We are currently about halfway through the integration with Coinbase, and we have some folks over there that have been using the software, and they're really excited about it. Kraken's exceptionally excited. We're going to be doing a Canada-specific launch with them here shortly. So, yeah, we've got some great stuff in the works as it pertains to integration. I think that's the fun part of the being in this space right now is the fact that we've got such regulatory clarity, if you will, that the integrations and the network connectivity and the network effect of the people in the business and the developers, it's going to be a bright future. It's going to be a lot of connective tissue.
And what about perps? Have you guys thought about trying to get perps onto the offering as well? Because that would be pretty, I mean, there's tons of perps traders out there, like active day traders, and they could just all be made, redundant.
So that will be launched on Coinbase, and we're hoping to launch that at a very similar timing to it being offered in the US. So that we're
amazing.
We're waiting for that to happen.
Amazing. Sounds good. Well, yeah, it's all.
I'd rather do this than trade stocks on chain.
Why
wouldn't you?
Really great show, by the way. I love listening to you. You have a great perspective and a lot of insight. I'm a big NFT guy as well. I think they have a lot of intrinsic value as a network and as a unique identifier of value, intellectual property. And I really enjoyed y'all's segment about that. I don't think most people aren't talking about it. Most people have kind of given up on it as an art project that failed, and they're throwing the baby out with the bathwater. I honestly, I told somebody the other day, I think it's the future of mascots for brands. I think if you go into like these thrift stores that are selling old Coca-Cola signs, I think NFTs are and collectibles will be, have a digital aspect to them in the future but same type of marketplace.
I definitely see that.
Yeah.
Cool. Well, that brings us to time. Remember, you guys can register for Arch Public's algorithmic trading platform for free. If you go over to realvision.com/Arch, you will see the information and the details there. Please do check it out because I think it's a very interesting product. Before we go, a quick question for you guys. Please let us know in the comments. What's your next price target on Bitcoin? Answers only above 120K are allowed. Anything else, you will get blocked. Half joking on that. Make sure you're following us on X, OSF_REKT, Sergito, and Try Arch Public. We will be back next Friday at the usual time, 11:30 a.m. Eastern Time, 4:30 p.m. British Summer Time. I hope everyone has a great weekend. It's a nice end to the week for us all. Have a good one, and we'll see you guys next week.
Hey, Real Vision viewers. A quick pause to introduce you to today's sponsor, Axelar. Axelar is building the rails for the next wave of global finance. Not just crypto, but the future of how assets move, how markets connect, and how institutions plug into open systems. Think of it this way. Bitcoin brought digital gold, Ethereum brought smart contracts, but Axelar is bringing connectivity, the secure link between your favorite blockchain and traditional financial institutions, rushing to plug in. It's why top-tier firms like Dragonfly, Polychain, Coinbase Ventures, and Binance Labs are backing Axelar, and why global giants like Deutsche Bank, MasterCard, Apollo Global, and JP Morgan are already building on it. If you believe the future of finance is open, programmable, and interoperable, Axelar is the gateway. Want to digest deeper? Visit realvision.com/Axelar or follow on X at Axelar. That's AXELAR, the gateway to open finance.